Yo. What is up, StockTwits fam? Welcome back to another CMT Lunch Hour. I'm your host today, Larry Thompson, the resident CMT for this hour. Yeah, great week, right? Bulls are kind of back in control. Get your tissues ready for those bears. As you can see, got the bull flying high up there. Yeah, it's been a beautiful week in the market. A lot of breath follow through. A lot of people saw a consolidation coming, didn't get it, right? Got back above that 200-day, which was significant for the S&P 500. And that's kind of what we'll be reviewing today, right? We'll be going over the S&P 500, right? Taking a look there, strong like bull, right? Some of the behavior we've seen right now, we haven't seen in over a year. Some of the strength that we're seeing off the lows. And I think there's opportunities galore. We'll take a look at some charts that kind of represent the entire market, right? Breadth analysis, some may call it. Take a look at risk on, risk off, looking at something like discretionary versus staples. Some of the analysis that could take place there that's just confirming that the lows are in, right? That the lows are in the market and that the opportunities are going to be there, right? Whether or not we get a pullback, right? That pullback is probably going to be one that you want to buy. Lastly, we'll be taking some chart requests, so blast the chat with some tickers, and I'll be sharing my favorite setups, and we'll be going over those as a group. So let's kind of start first with the S&P 500. I'll be sharing that chart here, and we got through that 200-day, right? That was the big level that we talked about. In the S&P 500, we're looking here, right? This is a daily chart, about 9 months, about a year worth of price action, actually. And what we talked about last week is all the worry that people had around the 200-day. And what we talked about is the 200-day doesn't matter, right? It's just a arbitrary line that to some represents a long-term trend. What matters is the context of price action around the 200-day. And what we talked about is we have this all-time high AVWAP, right, which is essentially another smoothing mechanism that involves a volume, and we anchored it from that all-time high. And I noted that if we got above that level and we got above that 560, it didn't matter what was next because the market had turned bullish. And what have we seen, right? We saw a rip through the 200-day, and now price is following through to the upside. And so we didn't get much of a consolidation here, right? We got what? 1, 2, 3, 4, 5, 6, 7. We got about a week, last week of consolidation. Then we had the gap up over the weekend. And to a large degree, the coast is clear, right? Is it clear from the perspective of not expecting a pullback? No. But I think it's clear from the perspective that there's going to be opportunities to buy if we do correct here. And where do you buy? You buy at these levels highlighted here. This 560 range, between 5.5, also 550 range. So this 550, 560 range, you would want to buy strength if we pulled back into those levels. And so why do I call it strong like bull? One of the reasons is if you look at RSI in this top panel, which measures momentum, right? The strength of up days versus the strength of down days, we're now at 68, right? That's the highest reading we've seen this year so far. And that is bullish price action, right? It's essentially saying that the supply of stocks is not meeting the demand. Therefore, momentum is persisting in the market. This bottom panel, ADX line, is also highlighting similar, right? This is a trend indicator. And you can see when we got above that 560 level, the positive directional analysis actually overtook the negative, which tells you that the strength of the uptrend is stronger than the strength of the downtrend. It doesn't take rocket science to see that's kind of the case. And we have what many would consider here is this V bottom, right? V bottom's newer concept in the market. Used to see a lot of double bottoms in the market, but when we tested that level, we understood that we had clean risk reward to the upside, and we swung the bat, right? The chart that we were talking about when we were looking at the S&P 500 is we talked about we wanted capitulation, right? We wanted capitulation, and then we wanted price follow through. And so when you're looking on a larger time frame, set up this chart here real quickly, right? Larger time frame, chart's giving me a fit, huh? Larger time frame here, this is a weekly chart, and zooming out, you see we had the AVWAP from the bear market low, we had the 200-week simple moving average, and then we also had the prior cycle high AVWAP, which lined up with that 480 level. But what also did we have during that time in the market? Capitulation. We had the VIX, which many will call the fear index. It was above 45, right? And then now it broke back below 30. So that's what you tend to look for in a bottoming process is you look for that capitulation when people are extremely fearful, and then you look for clean levels to manage risk against, and that 480 level was kind of those levels. That's for your longer term account, right? That's for your 401k account. That's, you just hold your nose and you buy in those examples, right? Then once you have that, then you got to continue to clear hurdles across the deck of the market, and that's what we're doing, right? This is what this represents, is we're clearing those hurdles and passing with flying colors. So right now, you need to give the benefit of the doubt to the bulls. Pullbacks are going to be things that you want to be buying, not being scared of at the moment, right? We get back below this 560 level, right? We start to reevaluate that situation. But currently, we're in an opportunistic market, and we'll kind of go through some of those charts that I see opportunity existing in. So one of the examples I wanted to talk through here is looking at the market from a broader perspective in terms of not just the S&P 500. So this chart represents breadth, and honestly, it represents a lot of what's occurring in the market, right? Look at the S&P 500 equal weight, right? So you're taking all the stocks in the S&P 500 and equally weighting them, right? So they aren't just outweighed by those magnificent seven that everyone is overexposed to, because what you see here is this could just be getting started after this consolidation from above the 200-day, right? So essentially what price did is it reclaimed key levels, right? Then it reclaimed this longer term trend and consolidated, right? Well, what do you give consolidations? You give them the benefit of the underlying trend. And the underlying trend in this example was up. And now we're seeing this resolution as we had a bullish engulfing yesterday that ate up the past 3 days of price action. So we had 3 days sideways, and then yesterday's price action eclipsed all 3 prior days. That shows you that buyers are stepping in with conviction. And this represents the chart of charts. This represents 500 different stories within the S&P 500, not just those Mag 7 names. Well, let's look at those Mag 7 names. If this represents breadth, look at the Mag 7 names, right? You have that similar. You reclaim that level. You could call this a scoop and score, right? You scooped, and then you saw the price follow through. And so this is just, these examples are giving you very, very clean levels to manage risk against if we do get a pullback. You have $50 on the MAGS chart, right? Then here you have that 170 level, and we have that 560 level in the S&P 500. I think what a lot of people get confused with is they're trying to predict the future. When should I get out, right? And they're trying to anticipate that. Well, the market will tell you, right? So just don't be predictive, be reactive, just like in football, right? What does a quarterback do on a run pass option, right? He analyzes the defense, right? Recognition, right? He's prepared for that. And then he executes the game plan, right? He reacts to what the defense has given him. He doesn't anticipate the defense to drop into cover two and then throws the football and throws an interception, right? What he does is he looks for those linebackers to see who's queuing, see if they're going to come inside or outside to where he pitches the ball or he takes it for himself. We do the same thing with the market. We analyze it and then we execute the trades. The other thing I wanted to highlight here is this is a great example of how I use RSI, right? Once again, that's a momentum. So the strength of the trend. And this chart just highlights how last time we tested the 200-day, which this is why I was highlighting to you guys last week, the 200-day is arbitrary. What does price look like in terms of testing it? Last time we tested the 200-day, RSI served as resistance, right? RSI 50, which that is essentially midfield. Being at 50 is midfield, right? When we're above 50, that's when the bulls are controlling the ball. When we're below 50, that's when the bears are controlling the ball. So last time we tested it, the bears were in control. But this time when we tested it, we were already above 50 RSI. The bulls already had the ball. It's a lot easier to score when you already have the ball. And that's why we were able to see this follow through, is we already had strength into it. And so that's kind of how I just wanted to highlight this RSI scenario here for people. And then also you can see here on the bottom panel, we have the Magnificent Seven versus the S&P 500. So this is a relative graph, right? So as MAGS goes up, if it's going up quicker, this is ascending. If it's going down, it's descending. But what are we seeing? We're seeing the largest and most important names in the market get back on the field, right? So Jason Tatum went out, right? He's an MVP of the league, right? He's one of the better players for the Celtics. That's not a good thing, right? These stocks represent those MVPs of the league. and they're coming off the bench and starting to re-enter the market. At the same time, breadth, the charts of charts, are also re-entering the market. So you see a lot of strength here underneath the surface that is just opportunistic in the longer to intermediate term. Short term, we might have a pullback, but you have levels to manage risk against here. Once again, I've showed you guys this chart a lot because it's about knowing the levels you want to get out, right? We initially got out when we broke this 580 level back, right? Back in March. And then we were able to get back in a little bit at 520, then at 540, and then full position back at 560, right? Because you can make these incremental changes in your portfolio. That's all I wanted to highlight with this chart. Is just draw your levels in advance so that way you have a game plan when pullbacks come, right? When we have that recovery. Because when you're doing it in due time, right? When you're doing it in the act, tend to not do as well. Next thing I wanted to highlight here is looking at risk on versus risk off metrics in the market, right? So these are kind of your sniff tests to tell if the price action underneath the surface is telling the truth or not. And are people placing bets risk-wise, right? Are they taking more risk than less risk? So this is one of my favorites to look at. So on the top panel, you have equal weight consumer discretionary, right? Think your Teslas, your Amazons, your Home Depots, your Lowe's. Those are stores people buy things at because they want things, right? It's not things that they need, right? The things you need are in this bottom panel, right? Grocery stores, right? The things you need to buy no matter what type of market we're in. And you could see that this middle panel is taking the ratio of discretionary over staples, right? Risk on versus risk off. And it's comparing it to the S&P 500. You see a very strong correlation there because essentially the S&P 500 goes up when risk on, right? Risk on environment. And we can see that that's exactly what occurred here is we had that head fake and risk on made a higher low before price did. And that kind of lets you know that, hey, the market might actually be in a bottoming process. Not that we knew it would bottom, but you were able to add some risk from these type of positions. And so that's what we highlight here in this chart. And what are you seeing? You're seeing a very strong rebound in risk on metrics. You're seeing this consumer discretionary really trade upwards as consumer staples kind of trade sideways. What's also bullish about that is the fact that at early stages of recoveries, right, you're going to see rotation, and that rotation isn't necessarily bearish because consumer staples might catch up a little bit during this pullback if we have a pullback, but that's not bearish. It's just that rotation of money starts to occur with under the surface because beta tends to do well at the bottoming, which I'll highlight here. Beta is a fancy, right? Beta is essentially the excess of the S&P 500. So it goes up more and it goes down more than the S&P 500. Right? So high beta, a little more risky than low volatility names in general, right? And so this chart was another example of very strong recovery, right? Because you can see here, we're getting back to those key levels. We're getting close to those key levels. But we saw off the bottom beta, baby. Beta is what you want off the lows, right? Because that snapback in beta occurred here. And so these are just confirmation underneath the surface that the next pullback, you probably want to be buying, and we may not get it. That's why you have to have those clean levels you get in against. But those are some of the things I kind of wanted to highlight high level from a risk on, risk off. I recommend looking at equal weight consumer discretionary versus equal weight consumer staples. Shout out to the chat. I see you guys, a lot of people on Tesla. I'll be getting to that. Snow. I see a lot of names in the chat. I'll be getting to those here in a few minutes. Just kind of wanted to highlight what I was seeing underneath the surface for you guys, kind of how I was using some of my CMT knowledge, kind of break down some of these levels. Another thing I want to highlight, I'm talking about beta here, but look internationally, right? Look at iShares Global Industrials, trading at new all-time highs today, breaking out of this consolidationary range. These are things we want to be looking at to understand that, hey, if the market pulls back, is it the top if we have international industrial names breaking out? Doesn't really make sense to me, right? It seems like that pullback is going to be met with buyers, which is why you probably don't want to be getting out of the market, because once that trend begins, there's not really a reason to get out because the market's in an uptrend, right? Wait for price action to confirm characteristics of a downtrend before you get out, right? Let's get below the 5-day, then the 10-day, then the 20-day. Right now we're above all of those, so there's no reason to even be thinking about that. But iShares Global Industrials looks great. This has Very diverse exposure from names like Uber to aerospace and defense names to Caterpillar to Deere, right? So I recommend maybe look somewhere else outside of just tech for once. Maybe look at these industrial names, look at these international names, and see if you have any exposure. Because in general, the S&P 500 is overweight tech, and so if you're able to add some exposure that's still going up without the beta of tech, right? Over time, you can limit your drawdowns and have a more smooth equity curve. What else is doing well? If ARC-F is doing well, are we worried about a recession? Probably not, right? That's probably not the thinking at the moment, right? Price will let us know if we need to change our thinking. But if names like Coin, Hoods, SoFi, Roblox, DraftKings, Toast are doing well, I think we're doing all right as a market. And so another area you can kind of dip your toe in and take names within this space and take a look at them because they're shaping up well. And then everyone's favorite, Bitcoin, right? We had that torture chamber, and it's funny because a lot of people are talking about how they want to see a double bottom in the S&P 500, but they're ignoring the fact we saw a double bottom in Bitcoin, right? We had this 75 level, we got to the bottom of the torture chamber, right? And that made a double bottom. And then once we got back above this 90 level, that was my signal to get back in. Obviously, it's a late signal, but I don't do a lot of bottom fishing. I kind of wait for a breakout back into a range that makes sense for me. And so this 90K level up to this 104, if we get above this level, it's you got to be long, right? And you can manage risk against 100K, but this level here, right, getting overbought again is great to see, and something like that, this asset, right? Also, probably indicative of risk in the market. I think it's also indicative of international tech, right? I think this is where it didn't make a new low, right? It didn't V bottom, it double bottomed, and it actually held up a little bit better than large cap tech in the US because Bitcoin is not a US phenomenon. There's a lot of international exposure to Bitcoin for a lot of people. It's a global asset, right? It's not a US specific asset. So something to keep on your radar as we continue to work through this year. Is I think Bitcoin is a name that, right, could be at 150 in no time. So let's go, guys. Liking the charts here. Let's take a look at some individual names. You guys are sharing some chart requests, so let me get to those. Kind of work our way through some chart requests. People are talking about Tesla. Let's start with Tesla. Let's just start with Tesla. Give the people what they want is what I'm told, right? I will give the people what they want. All right. We talked about this last week. You can go back and watch that on YouTube, but I said my favorite trade last week was Palantir short, which was me being facetious. That closed at like 3%. That was a loss, but that was to hedge some of the beta we had on. The other thing I recommended, right, was Tesla against this 280 level. And Tesla's done great, right? Tesla's done great against that 280 level here, right? It's up 25%, right? It's ascending above this 200-day. It's getting overbought. Those are things you tend to see in strong uptrends. Once again, had this scoop and score pattern that we're seeing throughout the market. I don't know if I'd be adding exposure here at this time frame, right, the daily, but if you're a longer term perspective, you want to zoom out a little bit and look at something like Tesla. I think longer term, 300 is your level, right? I think that's kind of your level in something like this. If you take a look, you had the base breakout, and then you had the scoop and score, and you just kind of manage risk against 320. And that's kind of the trade I see there. If you're even shorter time frame, right? Because I know we have a bunch of different time frames that join these, right? As long as we stay above this yellow line that represents the 30 EMA, which is a 5-day EMA, as long as we stay above that, you got to stay long, right? So you got to be long as we're above that, and that 330 would be your level. So on the daily chart, it's 280. Shorter time frame, it's 330. Longer time frame, it's 320. I do like Tesla overall, and I might as well just go through the Mag 7 while we're here, right? So let's take a look. As you guys know, I update my charts in advance, and I have my levels, right? Something like Apple. I think Apple, if we do see more rotation, Apple's kind of been a laggard here, right? Look at this bottom panel. As the market's kind of rebounded, Apple's not as much, right? And so Apple against 210 is kind of that level. Let's see if we can kind of break up here. And I think this could be an area, right? If we see some rotation, because that's what you tend to see in bull markets. You don't see breakdowns, you see rotation underneath the surface. I think Apple's a name against 210. I like that risk. I like that risk reward. RSI staying above 50. I like it as a trade. I don't really see, it might get messy in this area, but 210 is kind of that level from the downside. We talked about mags already. Let's look at this meta chart. So I like this meta chart. Let me add to this 20-day. Let's add the 20-day on here real quick. Blue. See, so you can see the 220-day kind of line up on this meta chart. That gives you 8 to 10% of downside, right? But if you look across the spectrum, right, let's look at the daily here. If you look across the spectrum here, you have this 590 to 600 level that it can probably hold against. Or if you zoom in even more, let's get a clean chart. Oh, it's going to keep showing my annotations. You kind of have this other neckline here. All right, I know this chart's a little messy, but you guys see what I'm talking about, right? If you take this level, flip it, right? See? That 630 level could be the buy the dip. Meta's been strong. All right, I think this 630 level, maybe wait on a shorter time frame till we get back above the 5-day, but that 630 level is the level I'd be managing risk against in something like Meta. Let's actually take a look at that chart in ACP. Okay, let's take a look at Meta here, and we'll apply some AVWAPs to it. Okay. Taking a look at Meta. All right, we're going to run that anchor VWAP from the all-time high. Once again, you can see all these levels kind of line up with that 590, 600 level. And that's going to be maybe where we pull back to, and you'll be wanting to buy these pullbacks, guys. These stocks are strong, and so the pullback to these levels would be a gift in my opinion, much like the S&P 500. So that's the level there in something like Meta. Keep looking through. Amazon, one of my favorites right now. I like Amazon against this 200 level. I think you can get in here, right? You have that scoop and score, and then former resistance turning into support, right? That's what you see here. This 200 level aligns with the 200-day. You can see in this area, right? We had that similar type of pullback. All right, and it's above the 200. So this would be a buying opportunity in my opinion also. It's a buy the dips type of market. So this 200 level in Amazon is where I would be managing risk against, looking to add to your portfolio. Broadcom's consolidating, Berkshire. Here's an interesting one. I was actually just talking with a friend about this one. Can you explain the neckline on charts? I can. Let me go over Google and then I'll explain neckline on charts. So Google, right? I kind of like this. It seems like there's a lot of negative headlines against Google, but it's working its way back up. Google against 165, right? That looks good to me. Google against 165, up 1.5% today. That 165 level is a clean level to manage risk against. Let it rip. Let it rip. Neckline. Yeah, what chart do I want to use for a neckline? Do we have a famous head and shoulders here? Let me just do this. Let me get you a head and shoulders real quick. And I'll kind of talk through it. But essentially the neckline is the other side here you go, right? So you have one shoulder forming, you have the head forming, you have the shoulder, and then this is the neckline, right? So what you'll see on a lot of charts, is that this gray line here, this neckline, is where it'll become resistance or support. So getting back above that invalidates this topping pattern. And so that's a level you can manage risk against. Something like that RSP chart that I was sharing earlier, which I'll actually go back to, is an example that has a neckline that we reclaimed. So this for trader N. So here's this neckline, right? This neckline is right here, and we reclaimed that so that you can see this big top forming, and this would be considered the neckline, right? And we're kind of breaking back above it, right? It's that key support and resistance area that would be signifying the top completing, right? And we had a top, but then it reversed, and that's the level you could manage risk against. So that's kind of what a neckline is. So good questions. Yeah, keep the questions coming in the chat too. So I see Tesla went over that. We'll go get to Rigetti here. Let me finish up the S&P 500 for the squad. Sorry, the Mag 7, because I know people tend to focus on those names. Boo, boo, boo. Okay. Sorry, guys. Taking me a second. Here we go. Went over Apple, went over Meta, went over Apple, Amazon, Broadcom we talked about, right? Google against 165, and Meta, right? So this is a chart I'm currently looking at, waiting to get a position in, right? But this is a shorter time frame Meta chart. But if we get back above this open, if we close green here, Meta's a buy all day, right? Back above this 640 level, and I will be trading Meta. But I like this. This is a shorter time frame. You can see it's turned into a buy the dip market, right? See how we pull back to this level, gap up, pull back to this level. So I like Meta. Microsoft's an interesting one because it's trading at the top of this range here, which you can see on this daily chart, right? Zoom out a touch. Trading to the top of this range here, this 450 level. I kind of want to see follow through here, but I think this has come a long way. I think there's other setups I like more in the Mag 7. Same thing with NVIDIA, right? NVIDIA has a key level here at 140. If I was somebody, I'd probably be waiting for it to clear one. So there's two trades here, right? If you really like something like this, you wait for it to pull back, right, to maybe 125, and you have a clean risk level, or you wait for it to get back over this 140 level. But either way, those are kind of the levels. Right now, I just think it's in a little bit of no man's land, so I wouldn't necessarily be trading it. To be fair, there's not a position I see to put on today. So that's the Mag 7. Let's get to some charts, some individual charts people want me to take a look at. Let's kind of see what we're... All right. Okay, let's start here with QUBT. Quantum computing. Yeah, beautiful, right? These charts look great. Zoom out to the weekly, right? It just very clean setups. Let's actually zoom back into the daily. Come on. All right, very clean setup against this $12 area, right? Really like a name like this. These names in general have done really well. Another one I can think of is Rocket Lab, right? I think these names just look great. Let's go back to this platform. Right, so zooming in, beautiful looking chart. Huge base, breakouts, annotate it up real quick. Right, 10 bucks is your level. You guys can see it, plain as day. But now you're at what, 12? So that's 26% downside. So if we zoom in a touch, right, you broke out here, right? So congrats if you bought it, but it's up 34%, not something I'm chasing. But if we pull back, right, that $10 is kind of that level I'd manage risk against. Shout out to you. BTM did me right today, still climbing. Let's take a look at BTM. Come on, 57% in a day. Like, I don't know what to do with this. Bitcoin Depot, no idea, fellas. Yeah, what am I supposed to do with this? Not my type of name. BTM. Good for you. Shout out to, I don't even know how to say your name, ADR Bob. Quant stocks looking strong. Correct. Right? But a name like this has a $50 million market cap, right? It's trading 3 million in volume. So there's volume there. But congrats to you. Not something I'm in on. Thoughts on APLD? Let's take a look. Applied Digital Corporation. 24% this week. Once again, $6 stock. What's this? Right? $1.5 billion market cap. I don't hate it. Right? I don't hate it. I think you got to look shorter term though. Right? You had this double bottoming process here. There we go. Yeah, you had this double bottoming process, but what do we do now, right? Like, you guys have made the trade. It's up 20%. What are we supposed to do now, right? It's up what? 104% from the lows, right? Shout out to you for getting in this. I don't have any thoughts. Hodl hands, maybe you hodl it, right? That's my thought there. Hodl it. Don't necessarily know what to do in this type of example. Rigatoni. Someone's asking about Rigetti, RGTI, right? Similar to these quantum names in general, right? They've had these huge bases that they're completing, right? Huge bases they're completing and clean levels against something like 10, right? So 10's kind of that level there, right? Another example, you kind of zoom in, you have this consolidation pattern, right? Right? Consolidation. Nothing too crazy. You have a key level, $10 you can manage risk against. All right. Let's not overthink it here. There's your breakout. All right. And then what else do we have here? What do we have, chat? Look at momentum. What is RSI doing? It's holding 50. All right. That shows you there's that strength from the bulls to keep this propped up. There you go. Stay long above 10. Rigetti Computing. All right, another name in this space, saying how it seems like people like these types of names. Rocket Lab, right? Similar setup. Kind of draw against here, against this 24 buck level. You have this base. There you go, right? What did RSI do? RSI held 50. There you go. Manage risk against 25 and something like this, right? What's the other one? I'm actually in this one. QBTS. It was up a lot earlier today. Right? At this point, you can be waiting for the breakout. But once again, all of these charts kind of have this similar pattern. This area has gone bonkers. But you have that base here. All right. Base breakout. Strong. Strong, strong, strong. Yeah, these quantum names look great, guys. I think you guys are heads in the right spot there. Snow. Software. Zoom out. See. I think this is just a story stock. I don't know what to do here, right? There's probably been a lot of money made. It's up 54% from the lows. Probably more money to be made. But something that trades this sideways for this long, guys, it's just opportunity costs, right? It seems great. I know you have a friend who's telling you, oh, yeah, I'm up 50% in it this year. But that friend probably also got in back here in 2022. And one of the things I like to do with these charts is look at the relative trend, right? Look how it's doing on a relative basis. You haven't made money relative to the S&P 500. So if you just took your money and parked it in the S&P 500, didn't ever fiddle with this game, you've done better than owning this. So that's where I'm just hesitant from that perspective when it comes to a longer term chart. But we got traders on the call, right? Zooming in, like I said, I don't see a trade here. This is not, I don't see a trade in a chart like this at this moment, right? I think there's a decent amount of overhead supply. What are we doing, right? I'm being devil's advocate here. But what if we see something like that? But if we don't see something like that, right, maybe 185, 190, you buy the breakout, but I don't see much to do at the moment in something like snow. I think it rallied, like a lot of things have rallied, but I'm not looking for stocks that are at the top of their range that are overbought at the moment, not breaking out. That's just not kind of how I trade. Snow earnings next week. Hit the road, Jack. Thank you for that. Yeah, let me check the date on that real quick. Check the date on snow earnings. Next earnings, 5/21. Yeah, so earnings are coming up. Might see a move, but not something I'm focused on. Not a name I'm interested in at the moment. HD reports next week. I think the chart will play catch up. Let's see what we're looking at there with HD. I kind of already have that chart marked up, so let's just take a look at it. It's an XLY. I actually took this chart short not that long ago, but I know it probably looks better now. I think it plays catch up. Looks like it's already playing catch up. Looks like it's already playing catch up. I don't know here. You guys saw I already had these levels drawn in advance. See, these aren't what I'm trading. I'm not looking for something like this, right? Seems like it can maybe get denied on a longer term time frame like it did here, right? But it's strengthening, right? I don't know. Maybe if we zoom in, you'll see something a little bit better. I don't know. I think Home Depot is sensitive to rates a lot. Oh, my bad. I'm not even sharing the right chart. My bad. So yeah, so something like Home Depot, right? I think it's struggle busting here. I think it's sensitive to rates. It reminds me a lot of XHB, right? Home builders, they're kind of recovering, but not as strong as these other names. But I like XHB against this 97 level, right? Something you see here, right? Want to get above that AVWAP from all-time highs. But in general, these names haven't rebounded as strongly, so I guess you could see rotation back into them. It's just not how I'm positioned. Actually, I'm curious about this chart now. Let's go over here. Let's go over here. Let's edit this from the highs. So this 106, right? I'm looking at stocks that are already above their AVWAP, right? So I don't see a reason to be in the ones that are below it at this moment. They might play catch up, but I think you can probably wait until you get better entry, or you can bottom fish it, right? Against these prior levels here. That might be what a lot of people are doing in something like the home builders. I just think there's sensitivity to rates, and I don't know if rates are going lower, like a lot of people think. But at $100 is kind of your level there, right? And something like XHB, and then 105, 109 may turn into resistance. But that's kind of how I'm seeing it. CDN Road War. I know I told you I was showing AAP. Here's that Home Depot chart. Don't love the way it looks. I think it still has some work to do. But yeah, that's what I'm seeing in Home Depot overall. Seems like everyone is bullish, which it's hard not to be. Look, we reversing price action today, staying strong here as a whole. Last chart we'll take a look at before I hop, guys, is we'll take a look here at just a daily chart and just kind of how we've seen the price action change in the market. So let's go here. Right, messy looking chart, but I'll explain it. So let's annotate. Right, so we've talked about this chart a lot. Right, that 550 level, this is a intraday chart, so it's shorter term time frame. Right, using the 5-day EMA, okay, and also coupling it with RSI regimes. Okay, so let's just walk through this very quickly. Okay, what did we have? Right, what did we have here? We broke below the 5-day, and then it was a sell the rip market. Sell the rip, sell the rip, sell the rip. Then the bad news as tariff came out. Right, then we started bottom, but we kept getting punched and couldn't stay above this 5-day EMA. Then once we cleared this 550 area, it became a buy the dip market. And so until this changes, right, when we start to get back down to this 5-day EMA, it's a buy the dip market. So this underlying current is what's building that bigger time frame bottoming process. Looks like a V bottom when you zoom out, but this bottom has taken time, right? Not the one of the quicker bottoms, but right, this is 348 periods on this chart, right? But it's since March, so it's taken a month and a half, 2 months for this kind of price action to work its way out. We had the capitulation, but that's why, guys, I think it's a buy the dip market. I think you look for opportunities to add positions as they pull back, that are staying above the 5-day, that are showing relative strength, that have RSI holding 50, that are above their all-time high AVWAP, that are above their 200-day, and that's the trade. So that's how I'm looking at the market, guys. I'll be writing this weekend on a lot of this stuff. You can follow me at Hostile Charts on StockTwits. You can also follow my work on Twitter at Hostile Charts. And I also have a Beehive that I write every Saturday, a little more in-depth research. Last week I wrote about EXI, right? I recommended EXI, which has been a good trade this week, right? Up 3-4% this week. These industrial names. And some of the names I recommended within it are names like Uber, right, which is up 11% this week. So we're looking for these breakouts. It's the type of market where breakouts are holding, where tops are failing, and where bears are getting smoked. So, guys, that's what I have this week. Hope y'all have a great weekend. Enjoy it. I'll be hitting up some farmers markets with the in-laws. Peace.